Large parts of Brisbane are flooded. How will this affect property prices in Brisbane? Will Brisbane property market continue to boom? Will it now fall? Or what will it be in the middle? If you're listening, if you're watching, you're about to buy a property in Brisbane or you already had one and you're thinking, oh my God, what's going to happen now? In this video, I'm going to be using a data-driven approach to explaining the most likely outcome. If you're interested, keep watching. My name's PK and I help people build passive income through data using the Property Investment Accelerator without needing to put down $15,000 on buyer's agents every single property. And guys, if you get value out of this channel, which really exists to help you in real estate in Australia and the economy, then give it a subscribe, give it a like. That way more people will find it. Let's get into it. So this first chart, just to kind of paint the picture before you look at, or I explain the 5 key points. This first chart explains the severity of the 2011 floods, which were the biggest floods before today's flood. The 2011 floods, which is here, in comparison to history. So you can see flooding is not a new phenomenon. For Brisbane in the 70s, there was a much bigger flood. And, before this century, there were lots of huge floods, okay? And so the current flood that we're talking about in 2022, it's somewhere around this moderate territory. So I know the media, especially if you're in Melbourne or Sydney, the media kind of makes Brisbane out to be all underwater. In fact, I'm sitting here in a suburb that the media is saying is underwater, but the last 2 days have been bright and sunny. I've been going for a walk, no issues whatsoever. Of course, that's not the case everywhere, but these floods realistically are around the moderate, maybe between the moderate to major levels. So the charts that I'm going to take you through in a second, which talk about the 2011 floods and how they impacted property prices, you have to keep that in context. It's not that bad this time. And one of the reasons it's not that bad, is that the flood levels aren't as high, and also a lot of lessons were learned and infrastructure was changed since 2011. Now, of course, it's still very bad, so let's have a look at it. Now, in 2011, this is the table, okay? So let's understand this table. So 2011, history can teach us a lot of lessons, so let's see what the floods did. So the way to read this table is low value suburbs that were flood affected and low value suburbs that were not flood affected. Medium value suburbs, so call it let's say 300 to 400 to about 800 that were flood affected, and medium value suburbs that were not flood affected. Then high value flood affected, close to 1 million plus, and high value suburbs that were not flood affected. So the very first thing to show is that, of course, in the first 3 months, almost everything went down. Now, I'm not saying that's going to happen in 2022. I'm going to come to that. But you can see that the flood-affected areas that were low in value, lower in value, sub 3, sub 400K, both flood-affected and non-flood-affected areas, because of sentiment, both of them dropped. And they dropped by 22% in the first 3 months. But over the course of the entire year, they only dropped by 8% and 7 or 8% respectively. So after the first 3 months, property prices clawed back. So it wasn't doom and gloom. The medium value suburbs, call it 400 to close to $1 million. The ones that were flood affected, you can see actually, even though in the first 3 months they dropped in value, they actually didn't drop in value if you look at the entire year. They still grew close to 2%. Very interesting, right? And it's even more interesting that the non-flood affected areas that were medium valued, 400 to close to $1 million, of course they dropped in the first 3 months, but they still overall had a drop. So it's hard to draw any meaningful conclusions between those suburbs that are flood affected and those that are not flood affected. So what that tells us, the first insight, is that even if you're not in a flood affected area, sentiment still washes over you, to use a pun. It still affects your suburb. And then high value suburbs that were in a flood affected area, they dropped the most, by 15 or 16% over the year. And high value suburbs that were not flood affected, they dropped less, but they still dropped. So how can we explain this phenomenon whereby, really expensive suburbs are dropping a lot, and really cheap suburbs are dropping a lot, but medium suburbs aren't really dropping that much at all. How do we explain that? Well, one way to look at it is that the most expensive, the high value suburbs are the ones, if you look at this map of Brisbane, are around the center or close to the Brisbane River. Okay, so you're talking, these Newstead, New Farm, you can probably recognize these suburb names from the news, Toowong, St. Lucia, Annerley, Graceville. These are all $1 million plus suburbs, and they're next to the river, so naturally they're affected more. Homes are destroyed very tragically, and so therefore property prices drop the most. And the same phenomenon is for low value suburbs. So you're talking all the way out here in Ipswich, where, a lot of these areas are heavily flood affected just because of their topography and how they, are situated on an altitude perspective, and also down here in Logan. Okay, of course, not everywhere in Ipswich and not everywhere in Logan, and I've always warned people to invest in there very, very carefully, but those are the suburbs that drop the most. And you've got your middle ring, your medium value suburbs, Underwood, and then if you come up north around Aspley, Boondall, Chermside, Banyo, Everton, Park, middle ring suburbs, they're not affected as much. Of course, they are still affected, but 1 or 2% drop or 5% drop isn't as much as an 8% drop or a 15% drop. Okay, so that's what happened in the past. So you might be thinking, well, this is not incredibly, this doesn't allow me to sleep at night, PK, because you're telling me that Brisbane will drop in price. Now, the thing for you to really understand is where the Brisbane property market was in its cycle when the 2011 floods hit. Okay, so you can see that towards the end of 2010, or even from the start or in the middle of 2010, property prices started to abate. What is the reason for that? The reason is that there was a new state government in town. They were cutting tens of thousands of public sector jobs. Now, public sector jobs directly or indirectly constitute more than 50% of employment back then in Brisbane. So that was a big deal. And also the property boom was affected by the mining boom, which had bust, or which was busting. Okay, so completely different dynamic. Property prices already doubled in the last 10 years or under 10 years. So we were at the top of the property cycle. They were due to correct anyway. And the floods, which happened around here, sort of around this time in this chart, they were in a down cycle. They occurred during the start of a down cycle, and it just allowed the market to free fall a little bit more. Now, like I said before, that free fall was mostly in the first 3 months after the floods happened in January 2011, and then the recovery sort of kicked in. Okay, so we're not in this position at the moment. Brisbane right now has grown by about 20-30%, maybe a little bit more depending on where you're looking, and it's right at the start of its next growth cycle. In the last 10 years, from about 2011, right, to 2020, Brisbane property prices, detached dwellings, had grown by less than 20%, 18% to be exact. You can see units were, basically flat. Let's just count units out. No one's buying units in Brisbane anyway, or shouldn't as an investor. The Brisbane property market is still at the bottom of its cycle, looking ahead 10 years. So yes, there is no doubt in my mind that property prices will be affected by these floods in 2022. Are they going to be affected as much as in 2011? No, probably half. The reason half is because we're much more prepared in terms of infrastructure, and also the floods aren't as impactful in terms of water levels, everything like that. They're about half or a little bit more than half compared to 2011. Okay, so it's not as bad, plus we're more prepared, plus we're in a completely different part of the growth cycle. So think about it like this. When you're driving, let's say 60 kilometers per hour in your car, and you're going through a bit of flood water, to use a flood-related analogy, your car by itself slows down. It doesn't come to a stop. Let's say the flood water is 5 meters or something like that. Your 60 kilometers an hour goes to 40 or 20, even without you braking, and then you just go through it, and all of a sudden you get that thrust afterwards because you've cleared the water and your car picks back up to 60 kilometers per hour. That is what I personally think is going to happen in the Brisbane property market. Next 3 months is going to be a little bit helter-skelter. I think some areas of Brisbane property prices may even come down 2-3% like they did, especially in the medium value areas in Brisbane. Like, I'm always a big proponent of medium value areas in Brisbane, not at the top end of the market and not the cheap stuff in Ipswich or super cheap stuff in some parts of Logan. I've talked about that many times. So the medium part of Brisbane, wasn't as affected as other parts in the 2011 floods. It'll be a bit of a slowdown and then it will start up again because to change the course of a ship takes a lot. You can't just veer the ship off 90 degrees or 180 degrees in the space of 1 or 2 months. It takes time. And if the underlying fundamentals are still there, the engines are strong, the current is strong, you got a good captain, then the ship just diverts back onto course. Okay, so the next 3 months, property prices aren't going to boom by 2-3% per month as they have been doing. They may even flatten out because sentiment comes out of the market, but then the long-term fundamentals kick back in. We still see that it's tremendous value, and I can tell you that buyer inquiry in Brisbane, even in the last 1 or 2 days, is still very, very strong. Okay, so that's my thoughts on the Brisbane floods. Looking at the data, yes, there's going to be an impact. No one can say there will not be an impact. Is it going to be catastrophic? No. Of course, it's so easy to buy in non-flood areas. Okay, you just go to Brisbane City Council, Moreton Bay City Council, Logan City Council, Ipswich City Council, council maps. They tell you where the flood zones are, right? So you don't need a buyer's agent to be on the ground and telling you which are the best streets, which aren't. All of this is freely available information online. So if you're in Sydney, Melbourne, I would still say it's a good time to buy in Brisbane so long as you know where to buy. And of course, never buy a flood-impacted property. But even if you don't buy a flood-impacted property, sentiment is still going to come out of the market. Okay, next 3 months, prices aren't going to boom. But my opinion is that the ship has sailed. It's a strong ship. There's good engines there. The captain knows what he's doing. It will pick back up. Property prices will recommence their upward trajectory after about 3 months, just like they did in 2011. They slowed down, they went back for the first 3 months, and then they kicked back into gear. Guys, hopefully that was useful. I tried to bring as much data as possible. All the data sources are QUT, Macquarie University, etc. Tell me what you think will happen. I'm obviously not a magician, but this is as much value I can provide on this subject matter. Always look at flood overlays. It's so easy to avoid a flood-affected property. I have multiple properties in Brisbane and Queensland. None of them were affected. Just Property Investing 101. All right, guys, leave links below to the Facebook group. We have these discussions, more than 13,000 people, my podcast, and obviously the Property Investment Accelerator. I wish you all the best. Plenty of places you can buy all over Australia. Growth plus positive cash flow right now. Brisbane is going to be a little bit weak, but still fundamentally an amazing place to buy over the medium and long term. Catch you later, guys. Bye.